Vallabh Bhanshali is joining us right now to address some of this chaos.
Mr. Bhanshali, good morning. Thank you for joining us. Really appreciate that you've taken time to join us. You've seen chaos and episodes like this in the past. How should investors deal with this?
I think there are two kinds of investors, and people confuse even if you are leveraged as an investor. So if you are a leveraged person, your level of leverage will decide what you need to do and what sort of risk appetite you have. So I would consider them separately. And a lot of the times when we are talking about being concerned, it is a leveraged person and not really someone who's just an investor. If you're an investor, you just ride out this atmosphere. These are extraordinary times, and these are stories that you will tell, but it doesn't affect your portfolio in the long term. Things will go back to wherever they are, maybe 6 months, 1 year, so you don't have to worry. And if you're an investor with cash, that's the real category that needs to be more alert and has to think as to what to do. So I think that's a separate category. The most important reaction that is necessary at this point of time is from the regulators. That for most of the regulators, this is the worst bear market they will have ever seen. They couldn't have imagined. And if they're still in the shadow of a bull market and regulating markets in that perspective, that would be the worst thing. So I think they need to wake up that, okay, it's an opportunity for us to regulate the worst bear market in a lifetime. That for most people, it is clearly the worst bear market, at least for Indian regulators, and how do they respond to it? In that, it fixes a lot of the technical aspects in the market. And coming last to investors with cash, you have to look at fundamentals. So first principle is that if you can't value the future, you are only speculating. So you can't get into stocks or ideas where you do have no idea what the future will look like, and which was happening because of technology disruption in some areas. Now it is happening on account of demand destruction at this point of time. But then there are areas where you know that this demand is only, for example, a utility or some of the more consumer companies where demand destruction does not happen in a large measure. And the market is already, giving you that education. And that leaves a pocket of stocks where liquidation is happening due to mutual funds selling up, leveraged people selling off, foreigners walking out in a huff. I think those are the areas to look at where the greatest and juicy ideas are available. So I think then, your focus is very limited to those category of stocks. And then see if you have the appetite to buy. You must conserve some cash because we're dealing with an unknown. So those are the 4 or 5 thoughts that I have about this market.
Mr. Bhanshali, right now, the economy is having impact on the market. But given the market intensity, do you think this could be in feedback loop where markets will now start hurting the economy?
So this happens to a certain extent, but since the Indian government, the economy is not a large holder of stocks. It is a special category of the economy that is holding these stocks. So I don't think it immediately translates into what we call tangible wealth destruction. This is paper wealth that gets destroyed. For example, PSU values go down and PSU divestment will get affected. But these are all solved over time. And the world, I think, is in a similar situation everywhere. So on a relative basis, we are okay. From the disease point of view, from the virus point of view, India is much better off for whatever reasons, and we must thank our stars and thank our ancestors for the blessings. But Nikunj, fundamentally we should recognize that China reacted very quickly to their problems, and they have overcome the problem by and large. The world was laughing at China or ridiculing China, but they were not wiser to the impact that they were having despite the scientists telling them. That having said, the world is now woken up and they are taking drastic action, which means it's a matter of weeks that ingenuity will also come into play, innovation will come into play, and we are limiting the spread of the disease. So from that point of view, the bad news on the disease also is going to bottom very soon if it's not bottomed out already. So I don't think that, yes, some destruction of, maybe 1% of the world growth has gone out. But that's okay. I think nobody can demand that my growth must happen in a finite amount of time. It gets extended from time to time and accelerated from time to time. So I'm not a worried man. I think economy will come back.
Bansali, historically, when corrections have happened and recessions have happened, central bankers have acted quickly. Right now, there is more abundant liquidity in the system. Fed has acted. It is always said that you should not fight the Fed. But right now, Wall Street is ignoring the Fed completely.
Well, these are such extraordinary times. Things have happened at such a great speed. So whether it be investors or regulators, it takes time to react. The President Trump at least made an announcement. I hope he's able to act on it. I think our regulators have also been wary and vigilant, since the system generally had a lot of liquidity. But I think this mindset that has to change, that we are facing the worst bear market in a lifetime, and they should regulate accordingly. And that's all. If you get that point, then you're going to look at the margins and the liquidity and the facilities and the rigor and all of that, and regulate accordingly. Obviously, the regulators must make sure that no new leverage buying happens. That new leverage buying should be curtailed. Old leverage buying should be helped out and eased out. So that's my thought. I may be wrong. I'm not the best at the how to regulate a stock market, but generally you have to look at just as you're helping people in disease situation today. Leverage was a disease that the whole world was facing, and today you have to just help them out and see to it that new people don't get contaminated. So the leverage is the big disease of the world, and the corona has come to remind us that.
Happened to the world, Mr. Bhansali, after 2008 was that it shook the world. It took years for economy to normalize. This is a market which reminds you of 2008 and in some moments scarier than 2008. So are we in for a long winter now?
See, I don't know how long the winter is, but 2008 and this are different. That a lot of this fear has come because of shutting down. We don't know what are we dealing with. So the happenings are such for which we had no preparation. We have no idea how to deal with it, how to quantify it. So, for example, if the travel company goes down, hotel company goes down in demand for 1 month, what does it mean in terms of balance sheet and economy implications? So I think it will take a few days and a few weeks to understand all of that. But if we have widespread bankruptcies of banks and financial institutions as we had in 2008, that would be a terrible thing. But that's not really being reckoned at this point of time because a lot of them were put on caution for various reasons already. So one has to wait and see that this translates into widespread bankruptcies of either businesses or financial institutions, as was happening in 2008. So I put this on a different footing. This is demand destruction, and our inability to estimate what is the amount of demand destruction that is causing this panic. And of course, the leverage players are having to, liquidate in a hurry.
Ali, right now everybody is focusing on Europe, but nobody is talking about China, which has recovered. When do you think logic towards China and recovery towards coronavirus will return?
I think I heard from people in business that, they already giving them dates when the shipments and all will start. So China, we saw that President Xi visited Wuhan as a message that, all is well. So China, of course, is, got its confidence back, got its mojo back. And so China will come back onto rails very quickly, which will also start easing out this whole demand fear that China was the biggest consumer. And that also is going to ease out. So I think fundamentally things have started to bottom. China will definitely come back in the next 2-3 weeks in a big way.
Mr. Bhansali, every time a crisis has happened in the world, it leads to a reboot. And if I could be slightly more descriptive with my question, when 2000 TMT bubble busted, it gave way to infrastructure boom. When infrastructure got busted, consumer stocks made a comeback. Now that the reset has happened in the world, what could be the lay of the land? What could be the outperformer? Where do you think leadership would emerge? How will things change?
So I really don't know, since where liquidation happens and where the big opportunities come. But leverage will go out of fashion as it happened in 2008. That people were cautious, and U.S. corporates deleveraged massively. They did all kinds of things, and corporate leverage in U.S. went down drastically over the next 2-3 years after 2008. So something like that will happen. But clearly, stocks that were down, whether they were energy stocks and metal stocks and some of the utility stocks. I really haven't applied my mind as to where the sun will rise, and that's not easy to predict as well. But at the point of time, those who have cash, look at the liquidation areas and see what you can do in those troubled waters.
Mr. Bhanshali, why is this sentiment reminiscent of 2008? Like you said, that 2008 was different. It was a system which had collapsed. This is a crisis within the system. But the price action is not scary, but it is frighteningly horrifying.
Well, because, the markets are so full of aspiration and hope that when that hope scoots, we can't really predict the behavior. And so we are reminiscent of 2008 because that was the last time sharp declines happened and there was chaos and confusion. And few people wait to see what the reason was. If there is a stampede, there's a stampede, whether for political reason or religious reason, it's a stampede. So I think it's a stampede at this point of time, and no one is bothered to see whether the reasons for 2008 were different or 2020 are different. It's a stampede, and it's a stampede reaction at this point of time.
I'll take a liberty of asking one more last question. The sell-off has happened in metals, the sell-off has happened in banks, but consumer stocks are still holding on. If consumer will slow down, if consumer stocks were expensive, why are they still holding on?
They hold on because people expect that, interest rates will go down. Therefore, the financial reciprocal will go down further. And consumer companies also happen to be better managed companies, deleveraged companies with more sustainable demand outlook. And so people will not let go of them in a hurry. And I think it makes sense as well.
You took time out to join us on a very crucial day like this. It really means a lot to us and our viewers. Thank you very much for your time, sir.